Good morning, guys. Welcome to another edition of the Traders Club weekly preview. We're going to be looking at, i.e., what's happened, what could happen in the weeks ahead, and I'm going to be looking at a different pair, however, linked to sterling, but I am going to be looking at the cross euro sterling. Right, I'm also going to take a look at cable, so I'm going to try and condense all of it, so the video is not too drawn out. But what have we got? Now, I've had a lot of requests, to take a look at euro sterling, right? To have an opinion on it. Well, let's see what's been going on. So we're gonna do, obviously, as we always do, we're gonna go through our cross time frame analysis. So I'm gonna start with a daily chart. Okay, so I want to see the primary trend. Now, while obviously my style of trading is all to do with supply and demand, it's all to do with volume. Yeah, so I rely a lot on that. Of course, I put my fibs on the chart. I mean, you've got to have fibs on your chart, right? So I'm going to zoom out. Let's take a look at what this pair has ultimately been doing. So I'm going to get my Fibonacci tool in. I really just want the most recent swing, okay? The market's going to be responsive to some degree to the most recent swing. So I'm going to stick this on the chart now. So let's line this up here. Good. So we've got that. So at least we can see what's going on. We can see 38.2% has been the most significant resistance, and i.e. we've got a value area developing on the daily chart. So let's zoom back in again now that we can see that. Stretch this out a little bit. Now, what I always like to do with value areas is obviously identify them. I think that's the so let's zoom out again. That's the primary objective, is to identify areas of value. So let's have a look. So here we can see the market was balancing at this point. So I'm going to take the low, and I'm just going to capture this region, and this is our value area, so we can actually see that. So at this point, the market pulled up, broke out of value, and was rejected. Right, so it was essentially rejected at these highs, and it returned back in value. Right, so we came to close back in to value. Now there's a 70% probability if this occurs, we will end up trading the entire range of the value area. In which case we did more than 70% to 90% of the value area before reversing. We tested the value area high, reversed again, tested it again, and then reversed again. So as you can see, this is a very, very strong kind of value area. So essentially traders are quite happy trading back and forth. This area is easy, in other words, to facilitate trading. So obviously the market prefers this value. So this is where we stand at the moment with euro sterling. So in order to kind of break up our analysis and kind of get an opinion, so we've started to identify some things. So I'm going to mark out, most importantly, the value areas. And this is why euro sterling is such an interesting pair for most traders at this point in time. So again, we're going to block off another value area. So just so we know what we're doing here. So we start balancing properly round about there. So again, we can see a similar kind of idea. The market came in, broke out slightly, tested, it was rejected, returned back into value to close on the day. There was a 70% probability that we were going to trade the entire value range. Well, at this point in time, this would have looked more like the value range. This wouldn't have really existed. So there was a 70% probability that we were going to trade to the value area low before reversing. In this case, we continued lower and eventually formed a bottom and then reversed, which at this point we have a value area high and a presumable value area low. We tested the value area high, reversed, and there was a 70% probability that we were going to trade the entire value range. In this case, we traded about 90% of it, reversed, tested again. In this case, we traded the entire range, and then we broke out value at this point. And at this point, the market would attempt to facilitate trade at a different point where there's value. Right, and that's really as simple as the markets perceive things. So this is the new value area establishment, and we're now at the value area bottom. Right, whenever we're in a value area bottom, we are going to be bullish. Now let's try and expand on that. So let's break it down. So what do we have here? Right, we've got falling volume, +1, bearish. Falling volume, falling price, i.e. bearish market, but we are going to be bullish in this case. Reason being is quite simple. The volume is falling. It's not validating price. So at this point in time, we are going to take the view that we are potentially going to be bullish on this market, because at any point in time, I'm expecting a reversal. We had a value area bottom, and if we're going to be at a value area bottom, we should be bullish about the market. So we are going to be bullish at this point in time. Right, so there are people who will be thinking bearish. You know, market is falling price, bearish. But no, it is bullish. Right, so despite it not looking that way, it is a bullish market. So we're going to maintain that. Right, so this is the view on the daily chart. Right, now if we do hit this value area bottom, right, which will be down here, which will be 70, then there's a good chance that we're going to get a strong reversal back to the value area high. Right, now if we break out of the value area, remember there's some resistance points here. So we've got a 200 exponential moving average, which is just sitting at the top. There's always orders here. This will be a strong zone at 74.70. So we want to be careful even when we're in the long side of the market. The market is now going potentially sideways. So again, this is the idea around it. Now we're not seeing any climatic activity, right? So we're not seeing a climax. So I expect this market to maybe, just maybe continue rolling lower for a little bit, and then finally get triggered up about 070, 13, 15, that kind of zone. So 70, 13, 70, 15. All right, so it's a good area to be positioned. Now, if we go off what we've been seeing, we've been tracing about 90% of the value area on the low side. So I'm not expecting a break of the lows, right? So I'm not expecting the market to break 070.50. So that will be my preference, right? So at this point, my risk is minimal. So I'll seek to have my stops below the value area. So if we do break out, unless I see a rejection, then I have to admit at this point that I'm wrong, ultimately, and the market reverses. Right, so this is the daily charts view. Now, it's not the only view we're going to hold, right? Oh, by the way, this is better tick volume, right? I'll show you how we utilize some of the color combinations on here, and they're quite reliable. So let's go to the weekly. Right, so now we jump onto the weekly. Now, there are a couple of other things that stand out. Now, we've already mapped this value area on the daily chart, right? So it's not necessary for me to map it again on the weekly chart. But as you can see, we're definitely balancing, so we're trading into some kind of value. Now, what I'm going to do at this point is we can also utilize Fibonacci here, right? So because obviously we're just looking at ranges at this point in time. So let's see where we are on the fibs. Now, in the case of the weekly chart, what we're getting is the 23.6 being the key resistance area. So now we've got Fibonacci confluence on the high, around about 074.16, 074.30, sorry, which is very close to our 74.40, which we saw on the daily as a very strong area for the market to bounce off. So what does that mean? That this is a very strong kind of zone, and we're likely to see a rejection at these levels. Now, if we break out of this, well, on the weekly chart is where we can identify a further value area, which is at the top here, right? So again, we've mapped this out on the daily chart, but here it's a little bit clearer from a balance point of view, so we can actually see where the market was balancing, right? There we go. So this is our other value area. So if we do come out and we do break the value area high on the weekly, then the likelihood that we're going to trade back into value at these highs is very, very great, right? So it's a pivotal point, and you can understand now why a lot of traders will be bullish on the euro. Now, there's something else. We can also see in the weekly chart a decline in volume, right? So the volume's falling off, and we can see that as well. Better volume, same idea. But what's most important, we've started to see some climatic activity. Now, climaxes at this point are usually signs of strength, right? So the market is rolling lower and we're climaxing, which means that essentially we're experiencing some kind of stopping volume, so preventing the market from going lower. So people are buying as the market is declining. So we're getting climatic, and we're also seeing a huge rush, i.e. of retail traders and other traders who like to ultimately sell the bottom of the market piling in at the same time. So what we've got is good trade facilitation, because clearly demand and supply is equal. So we're balanced, we're in equilibrium, and that's what causes the market to balance out. Right, so at this point in time, we are at the value area low, so it's a pivotal point. Now, I do not expect us to break this. Now, if I take my better volume, right, so we see there's high climax here, which is what the red bar denotes, and it's usually a sign of strength, and it's normally associated with a bullish candle. You'll normally see generally these red bars associated with bullish candles, because generally it's climax, but naturally a certain degree of strength is involved with that climax, right? So we generally see that movement. Now, most importantly, we're seeing yellow, which indicates some kind of low volume, some kind of falling volume at the point when price was falling. So we can generally see the market was very weak at this level. So I'm not expecting, with all this climax, I'm expecting we reverse to the upside very, very shortly. Right, and that's my view on the weekly side. So again, now I've got two reasons, two time frames why I'm feeling very bullish. Right, but I know that the players in these time frames, there's a very strong likelihood they are going to be bullish than bearish. Now let's jump onto the monthly chart. Now this always offers a slightly different picture, because now we're looking short, medium, and long term. So medium term we're bullish, short term we're bullish. Well, where are we long term? Now I'm expecting that at some point, now I'm looking at the Fibonacci, and we're at the 78.6. We've struggled there, we're rolling lower, and we're trading inside a monthly value area going back to 2004. So now there's a strong likelihood that price will be accepted at this level. So, but here's the key. We're also seeing on the monthly chart some stopping volume. So these white candles obviously is normally associated with a bearish movement that is being stopped. Right, so we're seeing a lot of high churn as well, which is normally denotes a turnaround. So when we see some high churn, it normally means the market could potentially reverse at these levels. So again, there's a strong case to be bullish, that i.e. the bearish momentum is about to come to an end. Now that being said, there are a couple of clues we want to know. Well, I'm expecting that there's going to be a rejection at some point within this value area, that the chance that we're going to trade, because now it looks like we're within it, all right? So depending, if we're looking at this high against this low, then we're within the value area, and there's a 70% probability that we're going to trade down to the bottom of the value area. In this case, that means 66.91. But I'm expecting that we get rejected, right? And I'll tell you why. Now, there are a couple of ways we can quantify this. Obviously, the volume is all giving me mixed signals at this point in time. So I'm going to use my expansion, right? So I'm going to run my Fibonacci expansion at this point, and I'm going to look for some clues, right? I'm going to see where the market is likely to reverse. So where are we going to get respected, in other words? So I'm seeing some ratio confluence with a 161. So there's a good chance that we test these levels, right, on the monthly chart, which is absolutely defying what we've been seeing on the weekly and daily. So despite being bullish, there's a very good chance we could see some bearish action further to the downside of some 200 pips as well, which will be about roughly 80% of this value area. So that's something to consider, right? So that's one view from the expansion. I'm going to pull it the entire length of the downward price action, right? So I'm going to now have a perspective here. Now, what do I have? I have some ratio confluence at the 100. So now this looks for me like a better zone to consider, right? So I've got some ratio confluence at the 100, and that's right about here again. So it's all telling me that I'm going to get a decline, a slight rejection. So there's a chance that I might come back to test the value area high at 72.43. So would I get long right now on euro sterling? Maybe not, right? I think the euro has the potential to weaken. I don't know why. Maybe it's Greece, maybe it's something else. But honestly speaking, I think all that stuff is just complete utter bullshit. Greece stays in the eurozone, nothing happens, right? They're just going to drag it out. Eventually, they'll have everything tied up and squared away. No one wants to see a Russian military base in Greece, right? So if they handed Greece out of the eurozone, that's likely what will happen. The Russians will establish a base in Greece, which they have always wanted. And of course, this will not bode well with the Americans nor the Brits, who are just next door in Cyprus. So in my opinion, I don't think Greece goes anywhere, unless Germany would like us to invade again all of a sudden. So no, I don't think so. So right where we sit here, I think there's some ratio confluence, and it's a good place to consider long positions. So let's see what happens, obviously, going forward. So again, the monthly chart is giving me a bigger picture of what the weekly and daily were telling me, So which is telling me that potentially I'm going to start seeing us probably go a little bit beyond these lows before any rejections. Likewise with the daily, I wouldn't be eager to get long, but what I'll wait for is, do we start to reverse early, or do we respect what the monthly chart on US sterling's been saying? Right, so guys, that's it basically for my view on US sterling. So hope this was fun. Now, just briefly onto cable. Euro sterling's taken up a lot of the day. Again, with Euro cable, looking at the daily chart. Well, this is the picture now. The last session, I think I mentioned that I was relatively bullish on this guy. Clearly, we had a decent case for a turnaround. And talking about that churn, right? So we can see that high volume churn and getting a reversal. Now we're seeing a high volume churn at the bottom, which could mean a reversal back to the upside, right? But this is tricky because we know the market's been balancing in this area. So there's a very good chance it's really tempting for us to come into this zone, right? Which would probably mean a reversal immediately on the euro, right? So at this point in time, I'm preferencing that we dawdle up here somewhere. And what the key is, this was a previous value area. So we had some rejection at the high. So again, through the same process, trading is a lot about process. So I'm going to go through the same process I did with Euro sterling, is identify balance, all right, where the market found it easier to facilitate trade, right? So we want to be able to identify these zones and then map them out ultimately. So again, we got one there, or we can stretch it out. That's fine. And there we go. So that's a balance area. Now, where are we? We're trading at this point in time. We've traded into this value area from these lows, right? We've traded the range of the value. We traded out, and there's another one here. Let's just map this out. So identifying these balance areas is very crucial if we're going to learn the concepts of demand and supply. So there we go. So we got a few areas where we've been balancing out, and the market's been going in. We found a rejection in here, and then reversed and traded back into this value area, rejection, reverse. At this point, there's a good probability that we'll trade the entire length of the value area back to 155.33. So this is crucial. We don't know what this is, and this is the key point for me. This is a turning point, whether sterling maintains against the dollar or it doesn't, right? And if we lose the handle here and we trade back down here and we cannot recover, then we are going to trade lower, right? So it's a turning point, right? So if we're a day trader, direction-wise, Monday will be everything. Put it that way. There'll be a lot of volatility, but it will be everything in terms of understanding what the market's going to do next, right? So the key here is we're going to see if we get some responsive selling or initiative selling in this case when we come into Monday. So it's pretty crucial. All right, so if we move on to the weekly, again, picture of sterling looks also quite bearish. I mean, one of the things you should do as a trader, which I think everyone should do, is make notes. Now, I've got notes on my other screen. I've got a note of everything that's happened. I've built it into kind of a positive and negative rotation in terms of what price is doing. But I have notes because it's really crucial. You're not going to remember this stuff when you hit the deck in the morning. You probably need to be able to visualize all this from notes. But in any case, we've got the market comes in, tests the 200 exponential, 50% retracement was there, and we're bouncing off that. Now that is pretty bearish. However, I do not like the volume associated with it. Now we've seen a sign of strength here, so we've seen some high climaxing going up, and well, market goes, gets stopped, and then rolls lower. Weak rally, bust through it, tests again. We get in a weak attempt to sell off. So I'm not feeling very confident with this. So are we going to continue to decline in volume? Well, we'll have to see. But clearly, we can see the up move has weakened, right? So the bullish momentum has clearly weakened. So from a weekly perspective, we're pretty bearish, right? So again, if we're bearish on sterling, then it means that there is a chance that the euro could reverse more or less immediately. But let's see what happens when we open up, right? So we've done a week, and look where we've ended. Now let's look at the monthly. Well, with the monthly, it's still very bullish, right? We're in a major balance area on the monthly anyway. So the market's been balancing within this zone, right? So we've been doing the lows, rejecting lower, and there's a good chance we could trade up. We had a gap up at the trend line, and now we're trying to trade lower to fill the gap. So if we cannot fill this gap, then there's a very good chance that this market continues higher. So for the long term, I'm still very bullish on sterling, right? And somehow euro sterling will have to adjust. I never really question the market. It's a different order flow. But the 38.2% is a good resistance, so I can positively see sterling in the long term at 164, but we're going to experience some volatility. So another crucial point. And what have we been getting? We've been getting a lot of stopping volume as we declined, right? And we've had some high climatic activity followed by, what was this move here? Again, this volume here was quite suspect. Wasn't a lot of climaxing, so it could be that people were positioning for longs. We did get a gap up. The reversal is on incredibly low volume, so there hasn't been any appetite for the downside anyway. All right, and what's been most disturbing for me with this pair is that when I looked into the daily chart, I can see short covering. So for those of you guys who utilize market profile, which I do, I could see that there was short covering in what was a weak rally. So shorts were covering some of their positions, showing a lack of confidence that the rally will continue. So for me, it's a huge picture. I don't see a pivot here, only a pivot low, but not a pivot high. So again, I'm a bit dubious as to whether we can actually survive this specific bearish rally. But the weekly gives us a picture that we could be bearish. We may well come to test the 50 again. Right, the monthly gives us a picture that we're bullish. So at this point in time, I'm going to maintain a very neutral view for the daily chart. But as far as the monthly goes, I'm long-term bullish, and with the weekly, there may be some short-term opportunities. But the key is, at this point, are we going to trade the value area down to 155.52? There's a good chance, right? But let's see. Volume is saying that. Who knows? We may well just come and break back out again of value. In which case, we will start to consider the upside. So that's my take on sterling this week. Looking forward to next week, guys. Hoping you have a wonderful weekend, and you've enjoyed this video again, and you've got my ideas on both cable and euro sterling. All right. Till next week, guys. Have a good one.